Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Here we are again, 1 week on. It feels like we just recorded our last What's Making Headlines. And, mate, don't worry, there's been a lot of headlines in between. Plenty to talk about today.
There is. I'm pumped about this session because the REB Top 100 got revealed on Tuesday, and we're going to talk about that. I mean, a lot of people would have seen the list. And by the way, everyone, if you want to get your fix every day on what's happening in real estate, REB, get the newsletter. Susan, can we make sure that we've actually got, Phil, maybe at the end of this, get one of your team to go on to Facebook and put in the link that allows people to subscribe to REB, and they're going to be able to access. We've already got hands being raised by people. Let's see what this person is saying. He's just raised his hands to say, "I'm here." Well, we're so happy you are here.
Welcome.
So Phil, we're gonna get that link in there because I know it's a quick 5-10 minute read, and it's pretty much summarizes what you need to know. I like the fact that you don't have to listen to how many people have died or not died that day, because I actually think sure, get your 15 minutes on what's going around in the world, but I reckon that quick 15-minute read of REB is going to give you a bit of useful information for those that are in the real estate space. Now, Phil, this is week 6, that we've been sort of working in this operating.
Mate, it's only week 3. It's the third time we've done this.
Oh, sorry, it's week 3 that we're doing this, but it's week 6 since we've been in lockdown.
In COVID, yeah. Week 6, week 7 in lockdown, and I think people are sort of accepting it now. This is the way it is, and I guess the positive of that is that we're already seeing some good rhetoric coming out of government by way of relaxing some of these restrictions from the 11th of May when the cabinet meets, and kids potentially going back to school 1 day a week and 2 days a week, and life getting back to whatever normal is going to be. But, I was only today, Tom, having a chat with one of our team across Momentum Intelligence, who does all the work on the REB Top 100 agents. And I sort of said to him, we just did a big survey, and we'll share some of the numbers, or we shared it last time we met, around how real estate's getting impacted. But I sort of said to him, look, I'd like to somehow measure whether everyone has got to that bottom yet. When in real estate, people try and pick the bottom of the market. What I'm trying to do, I want to try and pick the bottom of negative sentiment, where everyone's gone through that cycle of fear and what now and how we're going to cope, and all the big decisions people have had to make. Like I was saying to him, me personally, I think I sort of passed that about 2 weeks ago, where I've done everything I really need to do in order to sort of get myself sorted out, ready to sort of navigate this environment moving forward. I don't know where you sit personally on that same sort of that thing.
So I explained it to someone this morning. He said to me, Tom, to me, living in this country with what the government has done has made me feel like I have been put in an induced coma, that it's out of my control and they've induced me into a coma, and that the restrictions are going to determine how long I stay in the coma. And I said to him, that's not the way that I viewed it. The way I viewed it was this. I was driving along a freeway. I was in my Tesla doing, and I believe your business partner, Alex's wife, bought a Tesla too. I just remembered they put me down on the referral code.
Oh, really?
Yes, they put me down on the referral code, which means that I get free charging from a Tesla power station for 1 month. But can you let Alex know The thought meant a lot, but it doesn't mean too much because I charge at home anyway. So, but what it's been like for me, Phil, is it's like you've been driving on a freeway at 140 k's an hour. Life's good. Buyers around, sellers around. Federal election had happened. Negative gearing had gone. And what had happened is you're going along at 140 k's, and all of a sudden, around March the 11th, on the freeway, it says, roadworks ahead, slow down. And what actually happens is you're looking at it and you think, here they are. I can see the yellow signboards. Yep, slow down, slow down, slow down. And before you know it, you've come down to around 20 k's. Now, what's happened, Phil, is some people have basically thought, that's it. I can't drive any forward. It's out of my control. My personal view was, hey, you had to slow down because that's what the rules are. However, the freeway's about to start again, and you better not get used to driving at this speed, because very soon, and it most likely will be in May, they're going to say traffic as normal. You can't speed, you can't go too fast, but you can start going at 100 k's an hour again. And that's the way I've been thinking, and that's the message I'm preaching, Phil, because I've got to tell you, I've been pleasantly surprised with the fact that I think people overreacted. And the reason I say it is many real estate businesses went into conservative forecasts. They bank will only do 25% of what we would have done that month, but they've exceeded that. Many offices have actually done 50%. They had definitely a drop, no question about it, but they had really overestimated the impact COVID-19 would do to their revenues. So that's my take on it.
So, but where are you personally? Is the Tom Panos Tesla all charged up at 100% and ready to hit the freeway? Or you always were on it?
My car right now, as I'm speaking, out that driveway, I've got the Tesla charge in, and I'm going to have a look at it here in my phone. We're probably at around 85%, right? It's staying charged, and the reason why it's staying charged is when I get the signal from Scott Morrison or Glarus Berejiklian, if that's how you say it, Philly, we're off again. And I've got to tell you, it hasn't been too bad, because it's been a bit like a spell. When a horse goes off and says, have a break, come back, we got big things for you. And that's what it's been like for me. And it's cost me a few bucks, but I'm still eating and drinking and living pretty much the same way, whether I had those bucks. So that hasn't really changed things dramatically.
Yeah. I guess we're off topic, but maybe on topic. Tell me about the first day once Tom's allowed to open up his front door and jump in his car and get back to business outside of the marvels, which is Zoom and the internet. Tell me about the first day. What do you do?
Okay, the first day, I'm going to go to Grasshopper Cafe, and instead of sitting around like a loiterer where I sit there now, I go get a coffee and then I go sit at my car, and I'm making sure that I'm mathematically a few meters away from people. I'm going to go in, I'm going to walk in at Brendan at Grasshopper, weak soy flat white, extra hot with 2 stevia, and I want it on the table, Brendan, and I want 3 poached eggs, avocado. Going to sit down on my table. I'm going to pull out my mobile phone. I'm going to do what I do, and that is read my REB quickly, get my quick fix, see if there's anything for me to know. And I'm going to get out there and hopefully, and I don't know whether that's going to happen in May, hopefully I'm going to drive to a conference center and I'm going to see real estate agents there. I'm going to pull out my pen and I'm going to say, guys, let's get to work. We're off the tarmac. We're at the terminal. New economy, great opportunity. That might not happen in the first day, Phil, but the breakfast will happen. Let me ask you, what will your first day be like? Maybe not much different, eh? I mean, you're at the office.
Oh, I'm at the office, yeah. And I've deliberately come to the office every day, and I'm fortunate that I can walk to my office from where I live. And I sort of made the decision to separate church and state, right? I went, well, I've got a nice place I can work from home from, but I went, no, I'll keep on my routine, and we spoke about it last time we got together, get into work, get stuff done and head out. Now, the biggest change for us is that, amongst all the media work that we do. We have a very large events company, probably one of the largest in Australia. So we do all the big awards programs, the REB Awards, Australian Broking Awards, Australian Law Awards. I don't know, there's about 30 of them. So that's been very different for us. And like you, whether or not we're going to be able to get back into a conference centre and host those things, in May, June, July, even this year, I'm not too sure. But, as soon as that lockdown is relaxed, I think the biggest change on the first day is going to have people back in the office. So I need to transition my style, my habits, my behaviours from just coming in here and locking my door and just having a digital relationship with people back to being on the front line, being very accessible, being very visible within our organisation, and make sure that, I can help people transition back into an office environment. And a lot of them have really, really missed it. I think some people have settled into the whole distributed or work from home. But, if I was going to do a straw poll of our team here, I would say to the person, they all want to get back in the office. Maybe they might not work here 5 days a week anymore. There might be more flexible options moving forward. But that's got to be my first day. It's not going to be about me. It's going to be about everyone else, I think.
The Tarrant formula, created by Sam Gordon at Australian Property Scout, is the strategic way to build a profitable property portfolio. If you're looking to perfect your strategy, go to www.australianpropertyscout.com.au to book a call with Sam himself.
Listen, I wanted to drive, and I've got the luxury because I've still got a relationship with News Corp, and I still work out of their office when I choose to. I understand the feeling of 4 or 5 weeks of cabin fever. I wanted to go in there and sit there because there is no question about it. Virtual cultures can't mirror physical cultures, right? And I think that there's something about the personality of a business that you can only have it if there are humans around you, right? I can understand why you're saying to me that a lot of your staff would be craving to have those physical adult interactions. I mean, there are people I speak to, Phil, that are saying to me, listen, I was underseeing my kids and I'm now overseeing my kids and I need some adult conversations, So they actually really welcome an adult Zoom call. But Phil, it hasn't got in the way of you getting out the REB top 100. That's been sort of set and forget. It went on as planned. And on Tuesday, that was released. And so many real estate agents I've noticed on social media have been proudly promoting the logo with their ranking, which says to me the value that they actually have to it. I mean, I've always known that. I mean, even some of the closest clients like, McGrath's that I've had, I know what an integral part it played to them, whether it's their email signatures, whether it's in their listing kits. Even executives would talk about how proud they were to the marketplace about how many people they had in the top 100. Phil, it was released by. Did you do a video on this?
We did. I did a podcast. We did a big release via REB. So to everyone that subscribes to the email, you can do that. realestatebusiness.com.au/subscribe. You just go to the website, you find it out. They got it first, and there was a big report associated with that with all the bells and whistles. There was a podcast also that I recorded with Active Pipe, who was our principal partner for this particular initiative. They have done for another couple of years. But, let's chat about the top 100 agents. But that sort of loops into the point you made around us as an organization. Continuity is key. We've taken a philosophy as a company to say, yes, things have been disrupted. Market's been disrupted. We're in the business of media, real estate agents in the business of real estate. But you can take the same principle. Markets have been disrupted. So how do we continue to do what we've always done effectively in a changed market? So that's the philosophy we've taken as a business. So we're moving forward with continuity. So the REB top 100 agents and our viewers would have seen only about 2 weeks ago that we've announced and we've released the REB Awards, the big awards program for real estate is happening, and it's happening in June. And we're doing it for the first time for the real estate sector as a live broadcast. So this is the big awards program that we're taking into the lounge rooms and the homes and the dining rooms of the nation's real estate sector. So we're expecting a lot of people to tune into that. It's going to be the same thing. We're just doing it through the web. So this continuity is key. And with the REB Top 100 Agents, Tom, it is the benchmark. And to acknowledge the comments you just made, I remember just as a backstory when McGrath was listing on the stock exchange, and I went through their prospectus with a like a highlighter, both as a journalist, but also as a prospective investor in it, looking at how they presented that business. And I remember seeing it, that one of their ways in which they were crystallizing why the talent of their agents was the best in Australia is because, they represented, I think, about 27% of all of the top 100 agents. It is the benchmark.
Yeah, I remember reading it. Remember reading it as well, and it goes to show how much they value it if it's actually published in written form in reports that are affecting fund managers who make decisions on businesses. And they were heavily represented, I think, this time as well.
They will, yeah. But we've got the numbers, and we'll get into it. And for those of you who might not be familiar with this rank, or you might know about it, but you don't actually understand how it's made up. Tom was involved very early days. So I remember I turned to Tom to stress test my ideas to see whether or not, I've got the balance between, research and editorial and content with the realities of real estate. And the way in which we structured this report hasn't changed. It's in its 8th year now. It hasn't changed since that very first day. And Tom, we measure the total dollar value of your sales, and we measure the total number of sales, and then we measure your average sales price. So, this ranking leans towards people that sell lots of properties in high value areas. So this is a sales ranking in many ways. And Tom, that's still the right way to be measuring this, isn't it?
Yes, look, I mean, at the end of the day, I totally understand that there are people out there that don't have the luxury of a high price tag, and that they may actually do as many sales as someone, and they don't recognise. But I mean, there are other awards that even REB actually produces awards. Off the top of my head, the one that's I think is called the Deal Makers.
That's right.
Award that recognises people in that category. But this one here is it's a balanced approach where it's looking at the KPIs that you just mentioned. And I've got to tell you, over the years, Phil, I've noticed that there have been times where I've thought, hey, that person is not in there because maybe they haven't participated. But as time has gone by, I've seen the inclusions of those people that weren't participating in there. They obviously value it, or I would presume that you've been good at actually getting them to be included in it through your own team and getting them engaged. And there was a few new entrants in the REB, which was great, which basically says it's not like this set and forget group of people that you can't crack into. So let's talk a little bit about some of the names that came through.
Let's do that. So I recorded a podcast, went for about half an hour with Michael Johnson, who is the research lead on this, and the Active Pipe head, who was our principal partner with this. So we talk about the top 10, and we look at the numbers of the top 10 there. And Tom, I was looking through these and being quite aware or familiar with some of your clients on the real estate gym. I reckon in the top 20 of this list, from 1 to 20, I reckon over 50% of them are a member of the real estate gym. Tell me about that. What are you telling these guys to be so good? What's the secret?
Okay, so I've got to say to you, Phil, that and this is not taking away from the bottom 80, because like the truth is, even if you've made the top 100, that's a pretty serious effort. But when we look at the top 20, I look to myself at some of the similarities, and I'm looking at some of the people. David Walker, right? Ray White Wahroonga. Fantastic. What did David Walker get?
David Walker, he's number 10. He's got 15 years experience. 82 properties sold, total value 182 million bucks, $2.2 million average price.
Okay. What do I see? Good guys do come first. His dad's actually did a video with me. His dad's Dr. Ross Walker, that is on 2GB and was on the Today Show. And he's a really down to earth, and his dad was so like, I mean, his dad said to me on the webinar that I did with him, the video I did with him, he said, I just want to thank you so much for the stuff that you do with David. But I got to tell you, David is a quality person in Wahroonga, and what separates him, I look at it, very big on attraction marketing. So a lot of these people here build brands. If you'll notice that top 10, top 20, they're very big, Phil, on brand. And brand is a form of prospecting, because if you've got a great brand, and a lot of these guys don't want to talk about it, but once you get to a level, which is I call epic, people come to you. Right? People sort of know this girl or guy gets stuff sold. They're the key agent. And the truth is, their prospecting often is their brand, right? So then I look at people like Matty Stein. One of my closest mates and closest clients is Matty Steinwade. What did he come in?
Okay, he come in number 8th. So he actually moved up one spot from last year. So he's done well there. Tom, the numbers are he had 163 listings, sold 142 for about 183 million bucks, 1.2 million buck average.
Okay, and he's still been able to put on around 30 kilos of muscle on, because he's got to be the most muscliest realist. I've never seen an agent. The amount of time that Matty Steinway spends.
Is that a metaphor or is that physically?
Physically, you've got to see this guy. This guy here's got biceps, triceps. He's even now he can't go to the gym. He's bought those rubber bands. Oops, this camera's going shady. Let's bring it back in. Perfect.
Getting a bit blurry. There you go.
Yeah, what happens is when I'm standing up, I get animated and the Logitech camera gets fadey. But this guy here, Phil, obsessed with business. But let me tell you a little bit about Matty Steinwade. Plays the long game. Will actually tell the client, don't sell now. It's not in your best interest. Hang tight. Sell in 6 months' time. And I'm not stressing because I'll still be here. He always puts the client ahead of his self-interest. The third thing about Matty Steinwade is, mate, I got to tell you, Matty and my relationship is 25 years. This guy here was a guy that used to hang around Oxford Street, DCM. He was partying, doing every possible thing that you'd put into your body. And he pretty much ripped up his life, moved to the Central Coast, dropped the city, pretty much was hanging around. He was he was a guy that would let people into a club, bouncers, right? You can come in, you can't come in, right? And he would then party with them, dropped it all, went to the Central Coast, began his career with Rain and Horn. He's now with McGrath, and he's the number 1 agent for McGrath and has been for a number of years. And he got number 8.
Number 8. And I think it's an important point to make, Tom, is that out of this top 10 or your top sort of bracket here, and when we look at the way in which we formulate this ranking, it lends itself to people that sells in really high value areas. Now, he's based in essentially regional Australia. So he's the only agent in the top 10 based in regional Australia. And, his actual average sale price is down compared to other people who are at the top of the list at, 2.5 million bucks. But it just goes to show not being in a high value area is no excuse to not be a high performing agent.
Now, number 1, Alex Phillips. Is that the 3rd year in a row or 4th year in a row?
I think it could be 4 years in a row.
Right. So this guy here, and I'm not a trainer or coach to him, but he's eastern suburbs. What were the numbers there? What was the deal?
Okay, so he's been at it for 20 years. He has 3 support staff, and that's about a little bit higher than average across your top 100. 215 listings, 186 properties sold for $522 million, so $500 million. Average sale price $2.8 million.
2.8. Okay, eastern suburbs.
Yep.
Number 2.
Michael Clark, which I think is one of your clients. He works with you guys.
No, Clarkey from Manly. He's got the same name as the cricketer, but he
does, Clark and Hummel.
The cricketer. So what were his stats?
Okay, his numbers: 15 years in business, three support staff, so the same as Alexander Phillips. 195 listings, 183 sales for $435 million, $2.4 million average sale price. And looking at that, he's performed listings versus properties better than Alexander.
Okay. So he was a McGrath agent. A lot of them came out, by the way, Alex Phillips came out of McGrath. A lot of these people came out of the McGrath factory. So did Clarkey. Who's next on your list?
Rick Serrao, number 3.
Okay, there's another good client of mine, Rick Serrao. Let me tell you who Rick Serrao was. Rick Serrao worked for KFC, off the top of my head, in the Canterbury Bankstown area, western suburbs guy, went out to the eastern suburbs, and this guy's consistently been strong. Class act. What did he get, number 3 or 4?
He's number 3, up 2 spots, so he's performed well.
What were his? What?
Okay, so he's selling out of Double Bay in New South Wales. 26 years in business. Again, 3 support staff. So the top 3 all have 3 support staff.
Okay, so if you've got 4 staff, sack 1.
Well, okay, so listings 181 for 116 sales for $293 million, $2.532 million average sale price.
Okay. Well, I got to tell you, one of the things, anyone that's watching this right now on live or watching a pre-record, I've got to say to you, if a guy from the western suburbs of Sydney that was working at KFC can rewrite their story and hit it in the eastern suburbs and build, he owns the business there as well, and build an incredible business, it's possible. It's possible. It doesn't matter where you are. It's where you think you want to be. And let's move on. Who was next, Phil?
Oh, well, let's go down to this was a new entrant, Tom, into our top 10, and the first time we actually have a female within that top 10 bracket, the top 100 agents. Helen Yan, Ray White Baldwin in Victoria, 10 years experience, so relatively new to the game compared to some of the other participants there in the top of this bracket. 93 listings, 62 sales, $182,000 average, $182 million in total sales for $2.338 million average sale price. First time we've had a female in the top 10, which is great news.
Outstanding effort. First time REB top 10. Helen, don't know a lot about her. I know that she pretty much stays away from everything, keeps her head down and just puts deals together. Not one of these people that you see speaking on the platforms. Not someone out there that is immersed into the real estate agents industry, just does her thing. Beautiful. Give me some more.
Okay, Norman So from Bell Property, Strathfield.
Okay, client of mine, Norman So. Okay, is he a new entrant? I thought he was there last year.
No, he's moved up 3 spots. Again, he's in terms of experience, 11 years, 2 support staff, 158 listings for 100 sales, $171 million total value at $1.7 million average price, which is pretty consistent with Strathfield.
Bell Strathfield. And I've got to tell you, when I rock up and do an auction for him, I sit there and I can pretty much just chill out because I know that Norman knows what the buyer's thinking. Norman knows what the seller's thinking. Norman puts the deal together and all I do is go, sold. There's nothing else to it. And that's one of the signs of the good operators, Phil. They've got this ability to read the play, sometimes even more than the actual customer can read what they're going to do. Right? That's beautiful. There were some other clients of mine that I was thinking that I was looking at there is Matty Pilios. Now, Matty Pilios, I believe, has entered it. And Marshall White, my good clients and friends, Kate Strickland, Andrew Campbell, Matt Pilios, all 3 from Marshall White, including, of course, how can we forget? How did I miss him? He's a mentor in my 21-day program that starts on Monday. James Tostovan.
Number four, James. Marshall White, Bunadara in Victoria. 35 years experience, Tom. Support staff 7. Let's have a chat about that. 131 properties listed for 102 sales. Total value of properties sold, $250 million for $2.427 thousand average sale price.
Form is temporary, class is permanent. He is the classiest man in the business because he's been doing this for decades, not for years. And one of the things that we've got to understand is what makes a giant in real estate. And it appears a team and time in the market, right? There's no question about it. That keeps coming up there, you know.
Let's just some interesting, because there's this whole I guess this relationship between years of experience and making the top 100 list, but there's a few outliers in that, Tom. People who are relatively new to the game who are doing some really good numbers, and one of them, which is a standout, is 5 years experience. McKay Longhurst, Bressick Whitney Darlinghurst.
Yes.
5 years, 1 support staff, 99 listings for 91 sales. So great conversion. $161 million total value for $1.7 million average sale price. So, if you're new to the game, that's not a barrier for getting in the top 100.
That's a class act. And it's funny because I was talking to Adrianotti he's Bressick Whitney, isn't he? Bressick Whitney. Yep. He was telling me, he said, mate, you got to interview this guy. This guy here is sharp. He's been able to prove it, that it doesn't have to be a long history to actually crack it. What did he come, Phil?
He come in at number 12.
Another client of mine.
New entrant.
Another client of mine that's been in it a long time, and I'm pretty sure, I don't have the list in front of me, but I'm very certain he did well again, was from the Cronulla Sharks area, the Shire, David Highland. Was he in the top 20 or top 10?
His name is familiar, David Highland. I can't see him. He's not jumping out really quick. Hang on.
David Highland.
Number 7.
He's number 7.
No, Highland Property, Sutherland Shire, New South Wales. Down 1 spot from number 6 last year. 22 years experience. 2 support staff. 147 listings. More sales than listings, actually. Sorry. 147 listings for 183 sales, $202 million, $1.2 million bucks. So he sold more property than listings. It must be a hangover from having a good period before the thing started with the settlements.
So this guy here, what's his average price?
1.2.
1.2. I'd be interested to know, when you're looking at that list, Phil, is there any price points there that aren't too high that we can talk about?
Yeah, let's go through it. So here's one, Mark Kentwell from up in Newcastle, another regional area.
Yes.
Mark's a good friend of REB. We've known him for many years. Does well. PRD nationwide. He has an average price under $1 million bucks. So he came in at number 26. $132 million of properties sold. 139 sales. So again, a regional market, but some are performing very well.
I wanted to do a special shout out to one of my clients, Matthew Everingham. I believe he's a first-time entrant, and he works around the corner from my home, not about 10 minutes away. And I think Matthew Everingham from Richard Matthews.
Number 37.
First time?
New, first-time entrant, Matthew Everingham, Richard Matthews Real Estate. That covers Strathfield, Croydon, Belford, Georgia. So that's your that's your backyard when it comes to auctions, Tom. 20 years experience, 99 listings. Again, more sales than listings for the year. 114 million bucks, $1.026 million is average sale price.
Okay, outstanding effort. So there's been a few new entrants there, and I'm going to do a big shout out to another team that I do a bit of work with, the Harris in South Australia. Off the top of my head, they've got a few people there. Tommy Hector, Angelo Nicholas, I think as well, maybe Simon Noakes from Harris. And what I can tell you, Phil, that South Australia price points are not Sydney, Melbourne. Those guys there are doing 700, 800, 600,000. Do they pop up there on that list?
Yeah, there's a couple here. There's a whole bunch of numbers here, Tom, and I've just quickly gone through and looked at anyone who is under the $1 million mark. And, we have Anna Yanoon from Gilbert, and is it Yanoon Narellan? Average sale price, $574,000, still did $102 million in sales, 178 properties sold. So probably a lot of apartments out that way or townhouses. But look at that activity. It's huge.
Incredible. Wow.
We can talk about this stuff all day, Tom. It's all the reports there are on reb.com.au, realestatebusiness.com.au, but sort of some headline numbers, Tom. 9,124 sales, the top 100 this year. The highest total sales volume. So the leaderboard on that, Alexander Phillips, number one, 522 million. Then Michael Clark at 435. Then Richard Shalhoub, did I get that right? 307 million. Rick Sorreo, 293 million. James Tossman, 247 million bucks. So those guys between them have done about nearing what's that? Probably 1.6, 1.7 billion bucks for some quick maths.
I'm looking at these. I've actually just brought it up to have a quick look at it. And I'm just going to, Phil, what I might do is to add a little bit of flavour to it. I'll just give you the name and I'll give you a short sentence on some of these names because they should be acknowledged, but they can go to REB, the website, download the report. Of course, that's the way it works. You'll put in your details. You're going to become a REB subscriber and they're going to be kind enough to give you the list. But let's go through. Sam Rogopoulos, good friend, client of mine, from Jealous Craig, outstanding, came number 15. We move on. Simon Caulfield, again, number 18, new entrant from Place in Brisbane. Okay, so this is not necessarily a Sydney-Melbourne thing. Outstanding. Andrew Lutzy, who has consistently been in that list from Cunningham's, has dropped a little bit, but still stayed there in the top 20. Dib Chidiak, long-term client. Right, haven't done a lot of work with him in recent times. He went off and set up his own business in Concord. Outstanding. Tim Heavies. I've got to tell you, I'm looking at these names. Chris Hassel, Buxton Bentley, was training with him this morning, right? Sitting there with his pen writing everything out. Here's a guy that's number 27, right? Number 27. And he's sitting there on the front row there, sitting there when I'm doing the virtual webinar through Zoom. And I've got to tell you, I'm terribly proud. It makes me terribly proud to see so many of these people. And I'd go through and say out of this top 100, Phil, I would say that most of these people are gym members or coaching clients. Alex Jordan from Brisbane, McGrath's, Brent Courtney, James Bell, Will Torres, new entrant from Brisbane. It's exciting. You can actually break into this list, right? Don't think that it's a closed book. Will Pereira from Breshik Whitney, outstanding. Looking at this, all righty. I'm having a look here. I'm trying to work out who came 100 because if you came 100, you'd be pumped, wouldn't you? Because you think to yourself, 101, no one would know me. Arabella Hooper, she's also from Harris, outstanding operator. The list goes on. I feel guilty going through all of these names because I haven't mentioned people here. But, Kate Smith from Adelaide. Let's have a look at Kate Smith from South Australia. She was speaking at ARIC and a real estate gym member. And I'm just trying to work out, she's a couple of hundred sales. You'd have to do that in South Australia to get on this list, but wouldn't you?
You'd have to. And this is the balance between the value of sales and the number of sales. So, yes, to top 100 agents, that lends itself to the more you sell, the higher you're up the ranking, but that's not inhibitive. You've got people represented from right across this great nation on this list, Tom.
Love property? The current Buyer's Agent of the Year and Director of Pure Property Investment, Paul Glossop, does too. And right now, he's offering you the chance to secure his best-selling book, A Surfer's Guide to Property Investing, absolutely free. Simply jump on Pure Property Investment's Facebook page, hit the message button and type Smart Property to claim your free book today.
Okay. Now, Phil, Anything else big been happening?
Lots going on, mate. So this is all about what's making headlines. The REB Top 100 Agents making headlines right now. We like breaking this stuff down. So go and check it all out. There's a whole bunch of stuff coming through as well over the coming weeks where we'll start profiling these people. And remember, the Secrets of the Top 100 Agents podcast is where we actually interview one-on-one these top performing agents. But I know, Tom, you're also doing a lot of work with these people, and they're, the best people in real estate I know make themselves available. So I know you share a lot of their secrets of their success across the real estate gym as well. And I like watching them there as well. So this is really good stuff. But other stuff happening right now. So Tom, one of the key themes across REB or Smart Property Investment or our product, the advisor, is around this reasons for rate cut lags. So obviously we're in a downward rate environment, but that doesn't necessarily mean that those savings, if you want to call them that, are getting passed on to borrowers. So you're seeing a bit of a disconnect at the moment with people looking at their interest rates. Some people are getting some very sharp rates from some of the major lenders and also the second tier lenders, but some other people, they're a bit out of kilter with where their interest rates are right now because they're not getting these rates passed on. This comes down to the complexity of cost of funds and margins within banks. But what we're seeing right now, and it's shaping the real estate markets, but it's also shaping how investors and owner-occupiers are buying or selling real estate, is getting the right access to finance at the right rate. So this is an ongoing discussion across a lot of our brands. And you're going to see this moving forward, this growing gap between lenders and whether or not you can actually get yourself a really sharp interest rate.
Yeah, and I'm beginning to realise the importance of having that close relationship with your mortgage broker or a close relationship with your banker, because I actually think those that are actually getting a benefit at the moment are those that are, like realistically, if you hang around with your banker or your mortgage broker and they occasionally go to sport games together, when there's anything that's of use, you're going to be the first person that they call. That's just a fact of life. There will be a lot of other clients, but if there's no personal relationship, you sort of are lower priority. So I would say to anyone watching this right now that is an investor of real estate, don't underestimate in the equation the role the mortgage broker or the people that provide you the money do. And I think sometimes people can get really myopic and they're just looking at, how much is my rent? What's my rent? Money and the source of money and the cost of money is a big factor in your return of investment at the end of the year, Phil.
Well, your biggest cost, if you're a property investor, your biggest cost to be in the game of property is your mortgage. It's normally a significant cost, 70, 80+% of the cost to hold those properties. So, if there's a big difference, and I know people are doing it who are currently on 4.5%, you can get down to low threes or even into the twos. That's a lot of money in your back pocket. On every $1 million you have, for every percent you save, that's what's that, 10 grand, right? Money in your back pocket.
Phil, cost of money is cheap, but I got to tell you, I mean, like yourself, I'm an investor and I'm in buying mode, but I actually have a funny feeling here. There might not be as many bargains as what we would have anticipated, because I've looked at all the charts and I'm looking at all the anecdotal evidence, and there's nothing suggesting to me that we have entered bargain territory. Prices are holding up. And I was thinking to myself, hey, this might be a window of opportunity to pick up something for maybe 15 to 20% lower than what you would have months ago. But that's not transpiring, Phil. I mean, properties are selling, not too dissimilar to pre-COVID-19.
And I think, this is testament to the intervention by the government around trying to shore up certainty of at least generating some funds. To get an absolute bargain right now, someone needs to be absolutely distressed to move that property. So people, if they can hold on to their property, they're not going to sell it cheaply. And then when you see the sort of stimulus package coming out of both state and federal governments, in particular the JobKeeper allowance, people will only sell their properties. And this is what our discussions are, and all the time on Smart Property Investment, is that people hold your properties as much as you possibly can, because when you start getting that distressing, you need to sell. That's what shapes markets. There's got to be a lot of investors out there or opportunistic buyers waiting to jump on a bargain. But you know what, Tom? I'm not seeing them either, mate, because I'm looking myself. And this supply and demand dichotomy of, more buyers in the market than sellers. There's a lot less stock in the market right now, and there is still buyers out there. So it is holding those prices relatively firm.
What's your feeling? You feel like you've got a bigger opportunity in the share market or property market at the moment?
Mate, I've been watching. I've got a self-managed super fund that I've had set up for 3 years, right, waiting for me to get around to rolling in my my super into it, which I was going to do, in April, right? I didn't get around to it, so I still got all my super money sitting in a retail fund, mate. That thing has been absolutely smashed, right? I've got a little bit of, I sort of dabble in stocks and shares, but I don't like the just how liquid that investment class is. So I don't know enough about it to actually be controlled, be a really controlled and smart investor. So I tend to shy away from it. So, I have my diversification play for having at the moment, my retail fund dabbling in that area. It's been hit hard. It'll bounce back. I'm not too concerned. But I like to invest in areas that I've got a greater understanding of controlling it. And hence the reason why I invest in property. My feelings and sentiments are it's always a good time to buy property if you're well positioned and placed to buy property. And that means being able to, number one, secure financing for the bank. And that's getting harder purely because of the current market. And we spoke about this last time we got together. There's a lot of industries now which there's shadow policies within lenders where they just won't lend irrespective of how safe your job is. Aviation, for example, hospitality. They're very cautious about lending money to people that operate in those sectors, even if you do have a safe and secure job. So if you can be in the market right now and you have the capacity to be in the market and you're prepared to be in the market, it's a good time to be in the market. But that doesn't mean you couldn't buy or should buy anywhere. You're still got to be very selective about where you're buying right now and why you're buying it and how it sort of lends itself or builds into part of your portfolio decision-making. It's in times like this, in times of crisis, times of flux when, in 20 years' time, people talk about the good days. There'll be those people who are in the market, but there's got to be a lot of people right now that also blow their dough and find themselves in a negative position. So horses for courses, Tom. I don't mind property. I'm having a look.
And I think you've got to be, like someone said to me yesterday, they said, look, it's obvious what you should do is buy things that have dropped the most because they're the ones that are going to go back. And I said to him, well, I don't necessarily agree with that because, you might look at, for instance, like let's look at airlines, right? Look at Qantas where you say, hey, they're in a better position than Virgin and they've had a big drop. And you say, well, they've dropped so much, so they're going to come back. The government's, going to look after Qantas. They want an airline in Australia that's never going to go down. But then on the other hand, you listen to Scott Morrison say yesterday, I want to be really clear. I see overseas travel, we're a long way off there, right? So that sort of says to me, don't just take it as a given. If something's gone down, right, that it's going to go back up again, right? You've got to be, you've got to make sure you've got to make you got to take a bit of a punt, but you should be taking a calculated punt and be researching as much. But that's why I reckon I have less insomnia than people in the share market, because I always think to myself, hey, I'm not checking the share price of real estate every minute of the day. And that actually gives you a bit of peace knowing that your wealth is not in your face every day. So what do? You just buy property in good spots that are going to be good long term.
Yeah, and I agree with that. And, I've got so many other things to worry about, how my share portfolio is tracking at any given moment. Everyone's got their own relationship with risk. And for those people who are happy to roll the dice a little bit and step outside what is the norm, I'm sure that a lot of people do well in this current market. Me, I sort of sit on the other side of risk at the moment. Look, I will purchase property at a point in time. But right now, I've got my money working really well for me, just sitting in cash in an offset facility against home loan, right? That's good money at the moment. I'm getting a lot of savings out of it. And what it means is that I'm getting utility out of that cash in a way in which it is invested in many ways, because it's reducing the debt that I have. But if and when opportunities do arise, it's easy to extract that cash. I know what I've got today is going to be there tomorrow to use it for the purpose of investing. Now, that's not advice by any means. That's just the way I'm approaching it. But, everyone's got to have their own relationship with risk and sleep well at night. And it's simple. I sleep well at night. I always have done, always will do.
And I think, Phil, I think you've made a very valid point there on the issue of cash, because you could sit there and talk to a number of people that'll have an opinion that'll say, if you've got money in the bank, you might be losing money because inflation's going up higher than what you're earning. But the truth is, cash in the bank, the value of cash in the bank is not while it's in the bank. It's your opportunities to execute when they come up. And then you can turn around and say, what was the real value of your cash in the bank? It was able for you to actually deploy it in a way that others couldn't.
Yeah, and this is the way we'll move forward. It's everyone within the property investment space, the people I speak to, they're being reasonably conservative, but irrespective of whether you're a real estate agent servicing buyers and sellers or you're actually in the game of investing yourself, you can't outsource decision making, right? You've got to be responsible for making your own investment decisions. And a whole bunch of people, you see them all the time on Today Tonight or any of these other programs, and they're happy to point the blame at lenders or unscrupulous property spruikers for fooling them into making an investment and they didn't know what they were doing. The key thing with all this is that know why you're doing it, make decisions yourself. Yes, seek advice and pay for advice. Be careful who you get advice from, but make sure you know what you're doing. And if you're unsure, just don't do it.
I like that. If you're unsure, just don't do it. And the best ever real estate advice I was ever given in my whole life, I remember asking someone, what's the best piece of advice you can give me about property? He said, be in a position where you don't have to do anything. And I think it's good advice, isn't it? Where you don't have to buy and you don't have to sell, right? Where you can do it because you want to, not because you have to.
You have to. And it's when you have to is when these people get bargains. But Tom, conscious of time, a couple of other headlines here. This still continues. We spoke about it last week. Landlords getting the short end of the stick. This was on Wednesday. Yesterday, we wrote this story. It was on Smart Property Investment. The CEO of REINSW has slammed state governments protecting tenants amid the pandemic, saying banks are reaping the benefits while landlords are shouldering all the financial burden. That's Tim McKibben, who we spoke about last time, who heads up REINSW. We're still seeing our associations and bodies that represent real estate getting in there, helping out the sector. So I think you're going to see this dialogue as we go through this path.
Yeah, big shout out to the REIs. I think they've been extra special during this last 2 months. They've been all the REIs, REIQs, REIVs, REI New South Wales, South Australia, WA. They've all been very, very good, because there have been times where there have been, like, some of the decision making's been made in a day out of desperation and urgency. And then they've been able to sort of say, hey, hang on a second, look at the whole picture. This is the impact here. And you have seen decisions turned in 48 hours. I mean, the one in Melbourne only 2 weeks ago, where real estate agents were told on the Thursday night, that's it, you can't take a buyer to a property. And many agents had 60, 70 appointments lined up over those 2-3 days. It was the Easter period. And then they did a backflip on the Tuesday, and they said you can actually take a buyer appointment. I'm looking forward to, Phil, the fact that in certain parts of Australia, I think WA are doing open for inspections again. I do feel there's one thing for sure to everyone that's watching this now. Listings are lower than normal. There's a market sentiment did go down. I saw a graph that showed that in the month of April, the consumer sentiment, and it was a graph that was provided by research from Westpac, Phil, showed sentiment had plummeted to the lowest ever in the shortest possible time. That happened in the month of April. And what we clearly know is in real estate, sentiment correlates to number of listings coming on the market. If people feel that they're not feeling happy, that they're not optimistic about things, they're inclined to actually do nothing.
And this goes back to the earlier point, trying to map when this sentiment will be, at its bottom and start moving up, because there's got to be a point in time when that happens. Now, I think we're all prepared for a long road out of COVID-19, but there's got to be a point when things start all being negative till you start seeing some green shoots of positivity. And I think in hindsight, in a year's time, we'll probably look back to this period of April when it was at its darkest days. This is the depth of maybe the sentiment-driven attitudes towards COVID-19, because, people have now come to grips with where we are, by and large, I believe. And, watching the telly, Tom, I think a lot of people, and we spoke about it last time, are actually realigning themselves and seeing some enjoyment of the forced change to their lives with COVID-19. So hopefully we can start moving out of this. And as that sentiment returns in this whole notion of a wealth effect, when people actually work out, I am actually going to be okay and probably better than some other people. So what do we start doing about it? So I think that's where we are. And we'll look back to this period in April of this is the lowest point that we probably got as a nation. And, I'd acknowledge the work of our healthcare workers to support us through this, but also all Australians well, by and large, most Australians in adhering to what has been great work by the government. And I, my political preference is irrelevant to this conversation. I think whatever side of politics you sit, you've got to say that, Scott Morrison's done a pretty reasonable job steering us as a nation, and also the New Zealand PM. We've done well. We've done better than most. And I think we'll probably, as a nation, sort of elevate out of this, hopefully faster than other nations.
Well said. Phil, we'll see you again, same time next week.
Yep, same time next week. But what I got to ask you, Tom, the purpose of this chat is what's making headlines and what's going to be in tomorrow's headlines. My sources tell me you were speaking with our editor at REB yesterday. What are you up to, mate? What's going on? What's tomorrow's headline?
You were very kind enough to put me together with Emma
Ryan. Yeah.
And I'm going to tell you, she's sharp. She's sharp. If I had my News Corp hat on, I'd be talking to her and saying, "Are you working your dream job at the moment?" Because she was a.
Hey, be careful there, mate. I challenge you. Go and look at all the best property journalists in Australia. Guess where they start?
Wowee, the factory. The factory coming there from North Sydney. Walk the street.
So News Corp, stay away. But News Corp, you're sacking people. I'm hiring, mate. It's different.
Wowee.
Different question.
Okay. So she was kind enough to do a story and give me awareness. So Phil, what happened is over the 4 weeks, every day we'd be bombarded with Facebook messages, emails, conversations, and all our content in the real estate gym wasn't about COVID-19. Like, I didn't expect this to happen. You didn't expect it to happen. No one expected it to happen. So all of a sudden, what I had to do, Phil, was to make sure that I addressed problems that were relevant. And what I did is, as every phone call and email was coming in, I would go off and I would actually think, okay, I've got to produce content here, got to produce content here. And then at the end of the day, I just said to Susan, listen, we're going to produce a program called 21 Days Post-COVID-19, because as far as I'm concerned, we've gone through the roadworks and now we're going to start moving forward. And I'm predicting that May's going to be the month that we're going to start moving forward. And it wasn't hard to predict. I mean, the dialogue from the government was suggesting that we were coming to the end of it, right? And cut a long story short, we produced this course and we tried a new learning development system, which is going to allow us to keep track of who's doing what. And we put it together for our gym members. And then I got the idea, hey, why don't I just give it to non-gym members as well? But I couldn't give it out for free, because that would mean I would devalue what the membership value is to my current gym members. So I put on a fee of $97. How did I come up with 97? I thought to myself, hey, it's worth a lot more than that. But you know what? With technology, if you can actually appeal to someone less than $5 a day and then address every concept, how to get listings when vendors don't want to come on the market. What do you say to someone and not have commission breath? Here comes a phone. I hope that's someone that wants to join the gym. Okay. So all I did is produced all this content that is addressing the actual existing current problems. And then what I did, Phil, was I thought, you know what? Why don't I find people that have worked in real estate through tough times, through suffering? So I went off and I handpicked people that have been in real estate for a while and are smashing it. And then I reached out to Tom Ferry, my mate in America, who would arguably be the best real estate coach on the planet. And I reached out to people like McGrath and Dr. Fred Gross and Gav Rubenstein. And there's a number of these people here that are in the top 100. James Tostovan, and put in a few female agents, and we got a program, and I'm pumped about it. It's not going to make me a fortune. It's mainly for my gym members. And if anyone that's watching this, if you're a gym member, you're getting it. You do nothing. If you aren't a gym member and you want to do it, you go to realestategym.com.au, you click on it, 21-day program, and we start on Monday. And my view, Phil, is that they'll get a taste of the $97 feeling, and then afterwards they'll say, you know what, it's worth being a real estate gym member, and they'll stay on. But yeah. I'm pumped about it, Phil, because the truth is I've had to go off and create during this time, I'm not traveling Australia anymore. So what I want to do is create stuff that is of value to me, value to other people, so I can get immersed in it and be doing it, because the last thing I'm going to be doing is wearing Peter Alexander pajamas at 10:30, sitting on a sofa watching CNN.
Well, you don't have to look at the RB top 100 agents, Tom, and to borrow one of your phrases, success leaves clues, right? At least 50% of those people on that have been or currently are a real estate gym member.
And that's why Susan, who doesn't like me doing it, but I should do it, is I'm going to go off here and where is it? You know what she's done? Oh, there it is there. There we go.
You got it.
Mirror my video. There we go. We got the REB logo there.
Brilliant.
Right? Proud of it. REB Top 100. Good to see you guys. Phil, going to switch back here. There we go. That's where we should be, Phil.
That's nice.
That's exactly where we should be, Phil.
Well, this is one of the great things I hope from, and we'll close off, but some of the challenges that regional Australia has had with the bushfires. Hopefully, there's not going to be too much international holidays. So go out there and support the regional areas. If you're going to have a holiday this year with family and friends, do it local. Get out there, and a nice beach in Queensland would be nice.
Go to Maroochydore like Sky News did last night. Well, they did, and they actually had a backdrop there. Paul Murray had a backdrop there. He didn't go out there. Go to Byron Bay, go off to Coffs Harbour, go up and hit the Kimberley, go out to Adelaide wineries. You can have a good time. You don't have to be in Bali.
Nice one, Tom.
All righty. Thank you so much, Phil. See you next week.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
The Tarrant formula, created by Sam Gordon at Australian Property Scout, is the strategic way to build a profitable property portfolio. If you're looking to perfect your strategy, go to www.australianpropertyscout.com.au to book a call with Sam himself.